equity mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we'll help you learn to invest in 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
Yeah, I'm very good, Bryce. Very excited that we've made it to episode 85. If I'm being honest, I probably didn't think we'd get this far.
No, I would agree with you. I think one of the biggest learnings that I've had out of the Equity Mates experience is the importance and the reward that you get from consistency and perseverance. You know, we have been doing this week in, week out for almost 2 years now. And if it weren't for all of the many thousands of listeners that we have loyally listening to us week in, week out, we certainly wouldn't be in the position that we are today. So massive thanks to them. And Ren, we're so close to our 100th episode, just around the corner.
Yeah, 100%. And to thank all of our equity mates out there who have been listening. We hope to throw a party, but that'll be after our little Christmas hiatus that we plan to take. So there'll be more details coming in the new year. But as we get closer, you know, keep a lookout. Make sure you keep listening. We hope to see some equity mates there to celebrate, you know, investing, podcasts,
and everyone else,
the Sydney Swans, whatever else we want to celebrate.
Football Club.
Yeah. But yeah, no, it's been good. It's been fun. You're definitely right about sticking with it. We didn't really know much about either podcasting or investing in the early days. So,
True.
Full credit to our listeners that stuck with us.
Can't say we still know a lot about either, but
I could talk about podcasts, not so much about investing.
Great. Well, yeah, that's really encouraging for someone who may have just joined the show, hoping to learn something about investing because, well, actually, it's the ideal time to join the show because before we go into the episode, we'll do a bit of housekeeping. But this episode, Ren, we're going to go back to the nuts and bolts of investing. We've done 85 episodes. We're going to take this opportunity before we go into Christmas to go back over some of the basic 101 episodes that we have done over the last 18 months and give you a quick summarized version of what you need to know to get up to speed with investing, and then obviously you can go back and listen to the episodes in more detail. So that's what today is going to be about. Before we do, Ren, there's a bit of housekeeping. You want to give Thought Starters a shout?
Well, let's just rip through them all really quickly. So if you haven't signed up to our email mailing list, Thought Starters, you should. One email once a week, all the news and investing information you need to know, best way to procrastinate at work. Number 2, our social media, especially our Instagram. As with most people these days, it's our main form of social media, so follow us. We do Pardon the Jargon, we do investing news, we do funny memes occasionally if Bryce is feeling up to it.
Company in the spotlight.
Yeah, Company in the Spotlight. I've actually really loved that one. Found out some companies I didn't know about. One of them sparked a bit of a debate between the two of us, so it's good.
Is that the KFC one?
Yeah. And then the third thing to plug, book club. So we started book club. We are in month 2 of it. First month we did Liar's Poker by Michael Lewis, who is the author of Moneyball and Wolf of Wall Street. No. The Big Short. And then this month we are doing Joel Greenblatt's The Little Book That Still Beats the Market. For those of you who haven't heard about Joel Greenblatt, he ran a fund that returned an average of 40% a year over 20 years, which is just absurd. And this is the book that he wrote so his kids and lay people who weren't investors could understand a pretty simple formula to beat the market. I think we both finished it. I really enjoyed it.
Same.
We'll recap it in the first episode of December. But if you want to join our book club, jump on our website. You can buy the book there. You can listen to our past episodes. You can submit comments. You can tell us what you thought about the book, suggest future books. We want to make this as interactive as possible. We think reading is really important for investing knowledge. So come on board and join the book club. Anything else to plug?
No, Ren, I just want to re-plug that book. As you said, it's probably the layman that I am, I got a lot out of it. And I think it would be a great exercise if people were to read it and then be able to tune into the episode when we discuss it, because I'm sure we're going to go into a fair bit of detail on the special magic formula that he talks about. And it would be good if people had already read the book. You'll get a lot out of that episode. Fantastic book, so definitely get on it. Took us 3 or 4 days to read, so. Yeah,
I think as a general rule, book clubs aren't that interesting if you haven't read the book. It's just people talking about something that you don't really have any context for. So to get the most out of those episodes, you really probably should read the book with us. So yeah, join us.
Join us, exactly. So let's get cracking, Ren. We've got Basics 101 and episode recap to get through. So where do you want to kick off? I guess the fundamentals of investing and how and what you can invest in are probably the first question that people ask. I've got all this or some money. What do I do with it? Would you agree?
Yeah, 100%. And for me, when I started, it was really, or I thought it was buy property or put it in the bank and save and then buy property with it. Turns out there's more choices than that.
Absolutely. I would agree. Australia is a very property sort of weighted investing country, and stocks aren't given the light that they deserve. I think over the last sort of 18 months, we've both definitely realized the huge power and wealth creating machine that's to rip the line from you, Ren, that stocks are. So what are some of the options if you've got a bit of cash and you want to start investing? What are some of the basic investing options out there?
Yeah, so really quickly, there's obviously property. You can put it in the bank and earn interest on it. You can buy stocks, which is what we talk about a lot in Equity Mates. You can also buy bonds, which is the debt of a company or a government. You can buy precious metals or commodities. That's, gold, oil, wool, energy, whatever. And then, there's things like crypto. They're probably the main ones. And anything else?
No, I think you've covered them all off there. Do you own any or all of them?
So I still own some Ethereum. So I own crypto, own bonds. Well, I own hybrids, which are bonds that are publicly traded. Stocks, yes. I own a little bit of gold. Don't own any property. So
no,
I'm really bucking the Australian trend. Yeah. Yes. What about you?
Stocks, obviously. I have exposure to gold, but I don't have any nuggets sitting around the house. I'm keen to get into bonds. Your hybrid has piqued my interest, and I'm sort of be keen to explore that further. But likewise, don't have anything in property, and probably can't foresee myself going down that path for a while, to be honest. But keeping my eye on it. So they're the basics.
So yeah, they're the basics, and I guess the point of doing this recap is, a lot of listeners have joined us recently, so you probably haven't listened to us go through a lot of the introductory stuff in detail, the basic 101 stuff in detail. So what we want to do in the next 10 minutes, I guess, is explain why stocks are the primary focus of Equity Mates and the primary focus of our investing, and then rip through some of your choices. So if you've just joined us on this journey, you sort of have a basic context to then pick up and run with this podcast. So, do you want to start with why we prioritize stocks?
Yeah, well, in my mind, I think one of the biggest advantages of stocks as opposed to, say, property, is the amount of money and fees that you need to outlay in order to access that form of investment, or that asset. Stocks relative to property, are an incredibly cheap way to sort of start investing your money. Why else do we like stocks? I mean, it's a great source of revenue through dividends. But personally, if I was just to say it from sort of a broad umbrella stroke, I just think it's an incredibly interesting way to look at the world. And yeah, I think that's what got me interested in them. I'm sure you've got a much better answer than that, Ren.
No, I think it's a good answer, and everyone has their own reasons for choosing whatever they want. The one-liner that I've sort of come up with over the course of our journey, and especially for our live shows, that sums it up for me is that stocks have been the greatest wealth-creating engine the world has ever seen. Nothing has created more wealth for more people. In Australia, we cling to property, but when you take into account, costs and inflation, the returns aren't maybe as good as people first expect. But if you look at stock performance over a long period of time, that compounding effect of consistent, 7, 8, 9% annualized returns, it is pretty phenomenal. And yeah, when you think about it conceptually, like what these companies are that you're investing in, you're becoming a part owner of a company, and that company's whole purpose of existence is shareholder returns. So they go out and they hire the smartest people to try and grow their market share, to try and sell more product, to increase their revenue, to increase their profit, all to return more money for the shareholder. When you think of the mechanism of that, businesses doing that every day compared to, say, a property which just appreciates because someone is willing to pay more for it in the future, or gold, which is the same. Like, these commodities are just really dictated by supply and demand, whereas what these companies are doing is actively going out and fighting every day to increase shareholder returns. It's pretty hard to turn that down.
Big time. I think one of the major advantages of stocks as well, that was a massive draw card for me and probably you as well, once we sort of understood the true power that stock sort of puts in our hands, is that it actually gives you the opportunity to access almost all other assets in terms of investing, property, gold, as you said, bonds and that sort of stuff. You don't have to go and directly invest in these assets. You can do it all through the stock market in one form or another. And particularly for a beginner investor who doesn't have huge sums of money to invest in property, the stock market, and especially in this day and age, it allows you to get access to assets and put your money to work over the long term with reasonably and relatively small amounts of money. You don't need that $100,000 deposit to put down on 20% down on a house and all this sort of stuff. You can start putting your money to work from a very young age and also from a very small base as well, which I think is an incredibly huge advantage that stocks have over other forms of assets.
Yeah, 100%. Hopefully we've explained why stocks are what we focus on, what we enjoy talking about, and what we've based this podcast on. I guess the next question, and this is definitely a question that I struggled to answer when we started this podcast, is what are the different ways that you can invest in stocks? Because there's a lot of them and it can get confusing very quickly.
It can. And I think there's two approaches to this. There's the hardware and sort of the software approach, I guess, is that, we'll obviously discuss the active versus passive.
Speaking of getting confusing very quickly.
So what I mean is, from a beginner, if you're to say, how do you invest in stocks, or that one question could be like, actually, how do we go and do it? We need to talk about the broker. We need to talk about, you can be using things like Raise and those sorts of things. And then there's also the styles of investing in stocks, which I think is what you were referring to, Ren. So let's start with the styles of investing in.
So maybe we just say, if you want to know I guess what you were referring to as the hardware side of it, which is like, how do you physically go and buy a stock? We did an episode on that. That's episode 4. There's probably that's probably a good place to start. But you continue with what you were saying.
Yeah, no, you're right. Go back to episode 4, how to buy shares, and that will take you through brokerage and platforms. And I think we also did another one on that on episode 66, all about investing platforms and the fees associated with them. So go back and check out those episodes. But yeah, Ren, in terms of investing in stocks, there's a couple of approaches that you can take. We've got active investing style, a passive investing style, and investing, I guess, directly in individual stocks, which is probably an active approach. Would you agree?
Yeah. So I guess the distinction there is active management is when you, as an investor, give your money to someone else to actively invest in stocks on your behalf, and then that's your traditional, what you see in movies, the hedge fund guy that is researching stocks and buying stocks and all that stuff. The second approach, which is the passive approach, is you put your money into, it's basically a rules-based investment style. So the rule might be, I will passively buy the 200 biggest companies in Australia, regardless of what those companies are and what they do. And as companies get bigger and smaller over time, I will continue to just be invested in the 200 biggest and, rebalance so it's always the 200 biggest. And that's the passive style because no decision is ever made. It's just the rules when you start the investment are just carried forward. And then the third one, which is the individual stock picking, is really where you, as the individual, make the decisions yourself around what stocks you're going to buy. So that's probably a distinction that I got lost in the beginning because people start talking about things like ETFs, which are exchange traded funds, and LICs, and other index funds and stuff like that, and then you start to get confused by because there are active and passive ETFs and stuff like that. So probably the really simple distinction to sort of frame it is there's active where you give someone your money to manage and they make decisions. There's passive where you put your money into something where no decisions are made and then you make the decisions yourself.
I think it comes down to as well, but for a beginner, it really is, it's two. It's how much time and effort are you going to be putting into the stock market on a daily basis, which is going to be your active individual approach. And then if you're going to go with a passive approach, then you're sort of going down the track of setting aside money, that is just going to be ticking away in what you sort of said there, in ETFs or whatever it may be. So I guess that's it. Active, passive, individual. What's your main approach at the moment?
So I think the best approach is to do all three. So I have some money that I have put in passive vehicles. So a lot of ETFs are passive, some aren't, which you got to be careful of. But so ETFs are exchange traded funds, and I've put a bunch of money in Australian, European, American ETFs that just track the market. And then I've also picked some individual stocks myself, not because I'm great at it, but because I enjoy the process of it. And sometimes I get lucky. And then what I'm looking at now is also looking at who are good active managers out there that I can put some money away with, that I trust that over time they will get decent results. So I'm trying to sort of hedge my bets and do a bit of everything.
Yeah, nice.
What about you?
Yeah, very much the same. I've got active management through a couple of LICs that I have, financial services LICs, listed investment companies. And then I've got the passive approach, which is weighted index, and then individual stock picking, which I do myself. Wouldn't say I am overly successful in doing that. But yeah, I have a combination of all three as well. If you want to get some more information on those, we have episode 15, which is 3 basic ways to invest in the market. And then episode 17, we talk about the 5 styles of investing. So we go a bit deeper and talk about algorithmic based investing and that sort of stuff as well. So check out episode 15 and 17 for a bit more information on that. So Ren, we've discussed why we like stocks. We've discussed the different types of assets that you can invest in if you're interested in investing. And then we've also discussed the 3 sort of main approaches to to investing in stocks with active, passive and individual stock picking. So that's probably the absolute foundations at a very high level. What are some of the key takeaways that you've got over the last 18 months from a basics sort of point of view?
Yeah, so my biggest takeaway, and I sort of alluded to it before, but is that your biggest advantage, and in some ways our only advantage, is our time horizon. If you're trying to trade for tomorrow, you're competing against some of the best investment bankers in the world with an informational and like a structural asymmetry. Like they have faster computers, they have better information flow. They're going to beat you on the day-to-day trades, but their incentives are all short-term. Over the long term, us mum and dad investors, us retail investors have a real advantage if we can just wait it out in the market and let compounding take effect. So that's probably my biggest thing that I've learned. And if there's one thing that people get from our podcast, from me, I guess, I don't know what you think, but if they get that, and then I think the 85 episodes have done some good.
Okay, 2 things I want to go a bit deeper in there because I would completely agree. That's probably one of the biggest broad things that I've learned. I would, couple that with the value of patience, and removing your emotion from your investing decisions. If you pool all that together into a nice package, then you definitely are well on your way to hopefully getting some success in the market. So one thing if someone has just joined us, can you explain what you mean by the compounding effect?
Yeah, sure. So think of compound interest when you did maths at school. Very simply, simple interest is if you get 10% a year and you invest $100, that means every year you're going to get $10 back. That's good, but what's better is compounding, where as your money grows over time, you still get that, in this case, 10%. So in year one, you get $10 back from your $100, but that means you then have $110. So in year two, you get $11 back, and now you have $121. And then in year three, you get $12.10 back. And so it just keeps growing over time. And because the percentage you're getting back is around the same, and over the long term, the market gives you about 7 or 8% a year, your money just continues to grow and snowball over time. And the amount you get additional every year gets more and more. And that compounding effect is really where the wealth is created in the stock market.
Nice.
Was that clear?
Yeah, that's very clear. And it's the eighth wonder of the world, according to Warren Buffett, arguably the best investor in the world. So, you know. I think it might, and Albert Einstein as well. So yes. So two of the smartest people in the world preaching about the compound interest. So I just want to quickly touch on your time horizon thing. So it obviously frames your approach to investing, but that doesn't mean you're just willy-nilly spraying your money anywhere into any stock with the expectation that, over 20 years, this is going to turn out right. I want it to be clear that you're still putting in some due diligence and thought into what you're investing in, knowing that, hopefully with a bit of an educated approach, your stocks will turn out well over a 20 or 30 year period, right?
Yeah, 100%. But if you feel, if that is a barrier to entry for you, being worried that you're not going to be able to do the appropriate research or anything like that, I still think putting your money in something like a generic Australian index fund that just gets a basket of stocks, or a generic American index fund that gets a basket of stocks, is an absolutely fine approach to begin with. If
you're wondering what we're talking about with index and ETF, go and listen to episode 50. We sit down with BetaShares and discuss all things exchange traded funds. What is an ETF is the name of the episode 50. And then the following episode, we discuss some of the major themes that are going on in the investing world with technology and AI and all that sort of stuff. So go back and listen to that if you're unsure what we're talking about with index and ETF. So Ren, any other major takeaways? For me, I think very, very briefly, it's very important as a beginner to consider the fees that you're paying. I know that not all our listeners agree with that, but if you're investing small amounts, it's important to try and keep your fees on each investment as low as possible. Fees come in the form of brokerage, management funds, those sorts of things. Keeping them as low as possible as a percentage of your investment at each time is important. And also that comes in the form of choosing a broker. And that's very easy these days. There's many ways that you can do that. Head to your bank to find out what they offer in terms of brokerage platforms, and use that as a way to dig a bit deeper and find out what else is out there in the market. Since we started Ren 18 months ago, there's been a larger increase in the number of online brokers offering different types of services at low fees. So it's definitely a good spot for beginners now. You can access the market cheaper than you could certainly 2 years ago. Anything else from you, Ren?
No, I think that's a really important one, lowering the fees. I think that's a great one to include in this episode. But once again, we have gone over the time that we stated at the start of the episode. We've changed it to 20 minutes, and somehow we're still brushing up closer to 30 minutes. So that's probably a good spot to end it. If people want to listen to all of our Basics 101s, on our website, we've split them out. There's a link where you can listen to them all. You can see which episodes we consider our Basics 101. If you want, listen to all 85. No one's going to stop you doing that. But I think it was an important episode for us to just recap, given the number of listeners that have joined us recently, to sort of level set, and hopefully when we start waffling on in future episodes, you understand what we're talking about.
Absolutely. And if there's one thing I want to recap on, it is, and this is probably going to apply to all of our listeners, Ren's real name is Alec. His surname is Renahan. I call him Ren. So if anyone hears me at some stage during the interviews or online or whatever, refer to Alec. Don't be confused. I haven't ditched Ren. He's still with me. But for the purpose of the show and just as mates, we call him Ren. So I think it was important that we clear that up as well.
Yeah, that would actually be very confusing. I hadn't thought of that.
All right.
If anyone is now wondering, Bryce's real name is Bryce.
Yes. All right, Ren. Well, good to chat as always. And I think it was important that we did a recap of that. As you said, there's about 20 episodes that we've put together in our Basics 101 on our website. It'll be under the podcast link. Definitely go and check it out. There's about 20 of them. So you don't have to listen to all of the chat in between episode 2 and episode 85. So check it out. Thanks for joining us as always. Keep your ears peeled for hopefully a 100th episode party. And until next week, Ren, I'll see you next week.
Yeah. Can't wait.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.